Channel surfing these days will almost certainly lead you into some iteration of real estate, from realtors' million-dollar listings to dyers' house flipping. While it can be fun to see a dramatic home transformation play out over the course of an hour, it can be more fun to get actively involved. Real estate often proves to be a lucrative investment, offering both income in the form of rents and appreciation when you sell appreciated property at a profit. It's also a good way to diversify your portfolio as an asset that's subject to different influences than stocks and bonds. And for the everyday individual, it may be more accessible than you think. Although it requires considerable time, patience, and of course, cash, almost anyone can invest in real estate. In this video, we are going to talk about investing in houses for beginners. If you are interested, so stay tuned into the video. Definitely you will find some value. Let's move on towards the topic. Here are 6 ways you can get in on this investment-turned-pop culture phenomenon. 1. Real estate crowdfunding. Real estate crowdfunding is a strategy that allows enterprises to raise capital from large groups of individuals. It's done via online platforms that provide a meeting ground or marketplace between real estate developers and interested investors. In exchange for their money, investors receive debt or equity in a development project, and in successful cases, monthly or quarterly distributions. Not all real estate crowdfunding platforms are available to everyone. Many are reserved for accredited investors, that is, high net worth or highly experienced individuals. Still, there are several less exclusive platforms like Fundrise and Realty Mogul that allow newbies to invest as little as $500. 2. Real estate investment trusts. If you want to wade into real estate, investing in a real estate investment trust will provide exposure to the market without the time and cost commitment of buying your own property. Real estate investment trusts are companies that own, operate, or finance properties and real estate ventures. Like mutual funds or exchange-traded funds, they own not just one, but a basket of assets. Investors purchase shares of a real estate investment trust and earn a proportionate share of the income produced by those assets. Equity real estate investment trust, the most common type of real estate investment trust, allow investors to pool their money to fund the purchase, development, and management of real estate properties. A real estate investment trust focuses on a specific type of real estate, such as apartment complexes, hospitals, hotels, or malls. 90% of its annual earnings must be distributed to the investors as dividends. One big selling point of real estate investment trust: most of them trade on public stock exchanges. So that means real estate investment trusts combine the opportunity to own and profit from real estate with the ease and liquidity of investing in stocks. Geared towards generating income, usually from rent and leases, real estate investment trust offers regular returns and high dividends. They also appeal to investors because of the unique way that they are taxed. Real estate investment trust is structured as pass-through entities, meaning they don't pay corporate tax. This effectively means higher returns for their investors. Are you still watching my video? So definitely you will like my other videos as well. If you are interested in stock market or investing, and you don't subscribe to my channel yet, so subscribe right now because I upload these types of videos regularly. Now move on towards the topic. 3. Real estate limited partnerships. A real estate limited partnership provides investors with a diversified portfolio of real estate investment opportunities, allowing you to merge your funds with other investors to buy, lease, develop, and sell properties that would be hard to manage or afford independently. Like real estate investment trust or real estate limited partnership usually own a pool of properties, but they differ in their structure and organization. The first is to buy a single-family home and rent it out, a strategy that will only generate income if overhead costs are low. If your tenant's rental payment doesn't cover the mortgage, insurance, taxes, and maintenance, you're effectively losing money. Ideally, your monthly mortgage payment will be relatively fixed, while rent prices rise, increasing the amount of money you pocket over time. 4. Become a landlord. One classic way to invest in real estate is to buy a property and lease it or part of it. Being a landlord can come in many forms. The first is to buy a single-family home and rent it out, a strategy that will only generate income if overhead costs are low. If your tenant's rental payment doesn't cover the mortgage, insurance, taxes, and maintenance, you're effectively losing money. Ideally, your monthly mortgage payment will be relatively fixed, while rent prices rise, increasing the amount of money you pocket over time. Nowadays, you can shop for rental properties online through a site like Livestock, which allows sellers of vacant homes primed for renters to list their properties, facilitates the buying process, and assigns a property manager to the new buyer. 5. House flipping. Some people take it a step further, buying homes to renovate and resell. Though those TV shows often make it look easy, flipping remains one of the most time-consuming and costly ways to invest in real estate, but it also has the potential to produce the biggest gains. To be a successful flipper, you should always be prepared for unexpected problems, budget increases, time-inducing mistakes, a longer renovation timeline, and issues selling on the market. It's especially important to build a team of experts, contractors, interior designers, attorneys, and accountants you can trust, and make sure you have the cash reserves to troubleshoot. Even experienced flippers find a project inevitably takes longer and costs more than they think. 6. Invest in your own home. Finally, if you want to invest in real estate, look closer to home, your own home. Home ownership is a goal many Americans strive to achieve, and rightfully so. Residential real estate has had its ups and downs over the years, but it generally appreciates in the long term. Most folks don't buy a home outright but take out a mortgage. Working to paying it off and owning your home outright is a long-term investment that can protect against the volatility of the real estate market. It's often seen as the step that precedes investing in other types of real estate and has the added benefit of boosting your net worth, since you now own a major asset. After gaining so much information, now it's time to discuss some strategies for successful real estate investing. So stay tuned into the video, and if you like my effort, so don't forget to subscribe my channel. Now move on towards the topic. Strategies for successful real estate investing. Whatever form your real estate investment takes, certain strategies will stand you in good stead. Be financially prepared. Real estate is a particularly expensive investment, so you need to have cash on hand for a down payment, partnership share, or to buy a property outright. You'll also need a reserve to dip into if and when something needs fixing, which should be entirely separate from your everyday emergency fund. Before getting started, establish an emergency fund, pay off consumer debt, and automate your retirement savings. Get to know the local market. There's an old saying, the 3 most important factors in real estate are location, location, location. Start by getting to know the local market. Talk to real estate agents and locals. Find out who lives in the area, who is moving to the area, and why, and analyze the history of property prices. In short, do your research and focus on building relationships with people. Because that's what real estate is, it's a relationship-based business. Keep it simple. A simple strategy can go a long way in real estate investing. If your goal is to generate passive income, don't be fooled into believing you need to go big to make it happen. It's best to start small and keep your expenses low. The financial takeaway. Real estate investing may be more accessible than you think, and there are multiple ways to get involved in this often lucrative asset. Pure investment plays, which don't involve hands-on management from you, include real estate crowdfunding, investing in real estate limited partnerships, and buying into real estate investment trusts. Each of these mitigates the risk of investing in a major project alone or without guidance. More direct investments, like buying your own home, a rental property, or a property to fix up and flip, are also valuable strategies. However, it's best to do your homework before settling on one of these ownership methods, ensuring that you're financially secure enough to take on some risk and familiarizing yourself with the local real estate market. Bear in mind, real estate as a whole is a relatively illiquid asset. Projects can take a while to execute and to pay off. So whenever you think real estate, you almost always have to think of it as a long-term investment. I hope now you understand how you can invest in houses if you are a beginner. So that's it for today. And if you will find my video valuable, so don't forget to like and subscribe. We will meet again with another interesting topic. Till then, stay safe and stay happy.